Hey everyone, Sterling here with the Daily Market Review for Wednesday, August 29th. We're going to get into the Euro, the Pound, and the Euro Pound. We'll start with the Euro Pound. This is an email we got from a member, and it was a nice trade setup. It was encouraging to Chad and I to see a member kind of walking through the trade beforehand to us in an email. And I thought it was encouraging not just to us, but it could be encouraging to everybody else as something to look for. And there was valuable lessons within it. So we'll give it a look here, starting with the Euro Pound. Will zoom out to the hourly chart. If you guys remember, on Tuesday we were looking at all these pens here and where it was ending. We were seeing the market end at these major highs from August. Let's see here, August 6th, and so that was one of the reasons we were getting this big topping formation. We'll again zoom back into the 15-minute chart. But one of the reasons we took the Euro short, or a confirmation to the Euro short, was the correlation to the Euro Pound and the topping formation at that major high. So the Euro Pound had broken above this major resistance it held for quite a while. It had broken above that high, ran into a major monthly high, and given a very clear topping formation at that point. And so it's, while we don't know if that was going to be, what's the best way to say this? While we don't know if that was going to be a stop run or an intentional false move above that high, the way we looked at it at the time was, more than likely, given the fact that we're getting that topping formation at that major overall higher, the level we should expect the probable manipulation, and the fact that it was breaking through these highs when it did that, we had a little more indication that, at least for the short term, we should be expecting some selling. And the lesson to take away from this, and what the member pointed out, was that they had the suspicion that if they were driving the price off those highs, or if they drove the price into those monthly highs and completed the topping formation there, that was more than likely done to induce any further buying pressure they could and sell into any buying pressure they could find. Now, I would have preferred to see those highs taken out, but the fact that they were driving above, all these highs through here over the course of 3 or 4 days gives a lot of indication that there was going to be a lot of orders above all those highs over the course of 3 or 4 days. And so to see them take out those highs, run into a monthly high, gives a good indication that they were more than likely going to be selling the market. And that was essentially what the member was bringing out. And so what they had said, and really the gist of the email, was the fact that they were looking for a stop run of those highs. They were sending us the email raises coming into the 200, and they were saying, hopefully the market comes back to this point, kind of a little disappointed, you could sense in the email, but hoping that the market would come back and give the stop run. Well, it came back up and gave really a couple reasons for taking the entry. Number one, it gave you the stop run, but what else was confirming that? Well, there's multiple pens at that point, and then the final factor was that reversal legs back to the downside, and that's actually where the member was taking it, and made a very nice profit on the trade, cleared out the trade before getting into 7,900. The Euro Pound typically doesn't have the moves of the pound or the euro, but pip value is higher, which is typically why it doesn't have that. Why pip pip for pip, again, it doesn't have the same move, but if you factor in pip value, generally comes out to be roughly the same, maybe a little bit less. As far as the Euro Pound is concerned, so very nice trade there. It's important to remember what happened the previous day. Your indications from the previous day follow through to the next. Just while we're here on the Euro Pound, if that's going to be the first push down, we should be expecting a second push down tonight. The highest probability point I see for a manipulation area on the Euro Pound is this previous. We'll go back here, and you have a lot of. I'm going to actually kind of bring this down just a couple more pips. We'll say 26 roughly. But you can see the way the market responded to 26. We'll zoom out, and through here, this is the 26 level resistance there. It held again. Oops, sorry. So we finally broke above that. We came back down, held the support, broke down below it, held this resistance, and so there's been reason to believe that level would hold as support or resistance. So what do we generally look for? We look for a test of that level. look for the market to pull back, proving that it's holding, and then come back, complete the stop run topping formation for that second push down. And that would be the highest probability level in my opinion. If the market were to blow through those highs on the euro pound and continue to the upside, any move up in the euro pound tonight would be a trade that I would miss. More than likely, I'll miss every move on the euro pound because I generally tend not to trade it. Just mentioning, what I would do if I were looking at the euro pound while we were focused on it. So moving into the pairs that I'll be more focused on, the euro. We last night looking at the euro, kind of zoom into what we're looking for. We came down exactly to the point I was looking for, that 25.35 level, or right in there. And looking at that point, we came down, created a stop run through it. Could have taken entries through there. This one on the pen, if you were taking it to close the pen, you had rather take it rather quickly. It did give 35 pips back up into the highs, but that's where you started to see some reversal there. The second chance entry you had was as it came back in and completed that bottoming formation, gave up again about 25 pips. This trade ultimately broke through those lows. So that's a situation where you would have had a chance to have a couple runs at the euro. How you manage that trade? If you moved your stop to break even, if you took an entry on the first time around, could have possibly moved the stop to break even. In that case, you would have been closed out at break even. Really, best case scenario on this trade more than likely would have been break even. The thing with this, the thing with the euro and what every trader is going to be doing something different. So if somebody did take a loss on that, I can't fault them. If somebody took a break even on the trade, again, I can't fault them. The one thing with this trade is in my opinion, the best it should have ended up as is a break-even trade. And the reason I say that, and the reason I'd rather see somebody take a loss on that trade or end up as break-even, is because your risk-reward was never hit. Your 2-to-1 was never hit. So I would rather see somebody end up, I'd be happier to see a member end up break-even or a losing trade on this than to have closed out some profit. And again, I say that because I want members to focus on risk reward and realize the importance of it. Risk reward will single-handedly, I can almost guarantee, will single-handedly determine the successful traders from the losing traders. It's something that, as the years have progressed in my trading, I used to be more focused on win-loss, and not in the sense that I gave no attention to risk reward, but over the last few years especially, risk reward has not only helped my trading, but also the common denominators I see among all successful traders. It's not win-loss. It is never win-loss. While there are good traders that have a high win-loss, the common denominator between all good traders I know is always risk reward, and that's why I harp on it. That's why I say what I do looking at the euro in that trade today. Looking at the euro, I'm still not against what I had previously said. Chad is more or less treating this like it's in level 3 chop because the cycles are not clear. I don't disagree with that either way. Whether you're treating it like that or whether you're treating it like this is the first push up and you're expecting the second push up. Again, whether you're treating it like it's level 3 chop or you're looking for the second push up, the same entry we're both going to be looking for the same thing is essentially what I'm getting at, because the manipulation zones in this case are going to be the same thing. We'll go into the 15-minute chart, and where's your highest probability level? Well, your highest probability level, and I'm going to say is roughly right on that 25. I'm going to say 25.20. If we came into 25.20 and we had a stop run through 25.20. In this case, sitting there at 25.22, and we started to blow back to the upside, maybe a single candle pen, maybe some candles that look like this, where we test that level, blow through it a bit, get rejected back up. That's what I'd be looking for the start of the second push. If you were to just blow through those lows, never give any indication that it's turning, a move down in the euro would be a trade that I would miss. If we get it wrong, in this case, one of the great benefits of the smart money strategy is when you do get it wrong, if the market does just blow through these lows, because We have a lot of news coming up, and because the market is in a low volatility market, the cycle's not all that clear. So if you do get things wrong, which there's a higher likelihood that you will, in this scenario, more than likely you're not going to get the entry. If you do get the entry, though, that's what I'd be looking for on the euro. That really focusing around that 25-22 level, roughly, on the euro, looking for that stop run bottoming formation at that point on the euro. Now the pound's a little bit cleaner, and I like the pound a little bit better. We've had a first push up in the pound, and we'll go into, my only concern, I guess I will say, is the fact that we broke above those previous highs and we got rejected. But on the test down, there wasn't a whole lot of follow through, so I'm not giving that stop run a whole lot of credit right now. And as I zoom into the 15-minute, I'm going to focus, looking at the 15-minute, on where the highest probability level is, and I really like the 58.20 level on the pound. 3 reasons: 200 EMA, previous low, which the Asian session low, and again that 20 level, 58.20, 58.80, 56.20, 56.80, whatever 80 and 20 level it is. When that coincides with other things, and you get that confluence of events, meaning the multiple factors, the 200 EMA, again Asian lows, which is the previous support and resistance, or support in this case, and it's the 20 factor, that to me gives it the best chance of being the manipulation zone for the second push to the upside. So what I'd be looking for is possible break below it, and it may run a bit below this. It's possible you come back up, test that previous support and resistance, work down again a bit more before ultimately giving you that run to the upside. But I wouldn't look for a huge run below that 58.20 down to 58.15 or so, maybe 58.10 at the deepest level for the stop run section of that bottoming formation is what I'd be looking for. Same thing as the euro. If you run through that point and we just continue to slide through that level, if we slide through 5800, it really gives it no respect. Well, then the one deeper level I would look for on the pound is 5800. While I think it's less likely we'll run to 5800, I would view 5800 as a probable manipulation point on the pound, because it does have some confluence as well. It's a previous support level, and also the fact that it's a psychological barrier. So those are your 2 best points. If it runs through both of those to the downside, the move down would be a trade that I would miss, because I am expecting that second push up based on what happened Tuesday, and also the same thing what happened Tuesday on the euro, and the fact that both these pairs are still remaining in that accumulation that tends to separate levels. In other words, you see a first push up, sideways accumulation, you see a second push up, sideways accumulation, you see a third push up. Keep in mind here, guys, the euro pound. If the euro pound follows through, and if this is the first push down in the euro pound, and it starts to give the second push to the downside, what's going to be your best pair between the pound and the euro to trade? Well, if the euro pound's going down, what's that mean? It means euro weakness and pound strength. So if it means pound strength, then and we think both the euro dollar and the pound dollar are going up, what's your better one to take long if you get the option? Well, if the euro pound's going down, that means again pound strength. Therefore, your pound dollar would be the better of the two to take long. That's going to be something where in the moment you're going to need to decide is if the euro pound is giving you the manipulation at the point we talked about earlier, and the pound's giving you the manipulation at the 58.20 level. Well, that's pretty much a no-brainer. Have to wait and see. That's the way we see it right now, and it's a matter of waiting for the market to show us whether what we believe is valid or not, and that's, as always, what we're going to do tonight. Alright guys, that's going to cover it. If you have any questions, feel free and shoot below the video or in the appropriate pair. Be happy to get back with you. Or better yet, save your questions for the room and we will answer them live in the room tomorrow. Alright guys, till then, happy trading.